Trump is reportedly considering scrapping the electric vehicle tax credit. Under the Inflation Reduction Act, taxpayers who purchase a clean energy vehicle in 2023 or later can qualify for a tax write-off of up to $7,500. The Zero Emission Transportation Association, a group representing EV and battery makers, said in a statement, quote, "If the United States is going to actually compete to win against China, there needs to be a demand and a demand signal aligned with that goal. Otherwise, we would be undercutting those investments and hurting American job growth." Joining us now, we've got Albert Gore III, who is the executive director of the Zero Emission Transportation Association. Thanks so much for taking the time here. Just the net impact do you think there could be from removing this vehicle tax credit?
Well, thank you so much for having me. Zeta represents the full EV supply chain, so not just EV OEMs, but mining companies, battery manufacturers, all the way through to the electricity sector. And I think the first impact would be to increase costs for consumers. And I think that's something that, is an area where we're fully aligned with the goals of this administration to bring inflation down. We're talking about American-made cars, primarily. 3 out of 4 EVs sold in the United States last year were made in the United States. And that's been a result of this powerful demand signal. Also, 3 out of 5 EVs on the market today are available for below $45,000 before the tax credit. So ultimately, these policies are working to lower costs for consumers and bring jobs to the United States.
So what then is the biggest risk here, Albert? And I ask because I spoke with Tom Steyer at our Yahoo Finance Invest conference about this last week, and he said a potential big risk is that we see other countries like China pushing ahead of the U.S. when it comes to targeting emissions more effectively, for example. Is that something that you think could potentially push the Trump administration to offer more of these credits, given how he has viewed foreign competition in the past?
Well, I think that one of the goals of the incoming administration is to convince companies to bring jobs to the United States. And that's a goal that we certainly share. If we're talking about outcompeting China for manufacturing jobs in the battery and EV supply chain, I think we need to have a strong demand signal that sends the message all the way up through these supply chains that they need to be investing in the United States. That's been happening. Over $177 billion have been invested in our sector to build factories and to train workers. Georgia is a great example, $27 billion in e-mobility investments in Georgia. Savannah has a $9 billion EV manufacturing plant. This is foreign direct investment in the United States to hire American workers, build cars here, and we want to see more of that. I think undercutting that demand signal that is so tailored to U.S. manufacturing jobs all the way up the supply chain. It has requirements for battery components to be made here, for minerals to be produced and refined here or among our allies. I think it's a really important investment in the U.S. manufacturing economy, and we just want to emphasize that and ensure that that message is coming across clear.
To what extent would you qualify full self-driving as a demand signal for electric vehicles?
Well, I think full self-driving is a really important part of the future, and primarily these vehicles have been electric. It's a great use case for electric vehicles. It's very easy to build these into the grid. I was in Phoenix and surrounded by Waymos that were, driving perfectly next to me on the road. I think that that's going to be a really important part of the future, and ensuring that those vehicles are made here as well is really important.
All right, Albert, we got to leave it there. Really appreciate you joining us this morning. Thank you so much. Albert Gore III, Zero Emission Transportation Association's Executive Director. Thanks.